I want to let it hold for a second because it feels like we should get filled at that 110 level. So there we go. And the reason why I held it longer than that 5 seconds, you guys, the mid price down here was telling me.
And again, guys, this is from a YouTube talk on the Tasty Live channel, and it's kind of called like best day to do zero DT. And I need to post a YouTube link, and I'll do that.
Mhm,
But basically, their aim was, hey, is there a better day to put on zero data expiration trades versus any other day, right?
mhm,
And
mhm.
of course, they were not counting things like Fed days or CPI adjustments and that, announcements and things of nature. We know those days can be more challenging. So, yeah, they looked at the last 2 years of data. And one thing I didn't realize when you were talking about it, O'Brien, I thought they were a little more granular with their data points. It's only every 10 minutes of data, which I think is, kind of a little bit of a problem. I mean, you certainly can get minute by minute data that makes for a lot more uh, points to analyze, but I think it's probably better. But this is only every 10 minutes, and we know a lot can happen in 10 minutes. Um,
Absolutely.
yeah. And so again, only over the last 2 years as well. So you got to keep that in mind. And they actually did two different trades, as it were. They sold like a 40 delta, iron condor that was 20 wide, which we don't do. And actually in the video, Sosnoff even said they don't even do when they trade it. So I'm not really sure why they bothered to show those results. And so I didn't capture the results from those slides, although it's fairly consistent with the 20 delta short. So they did a 40 delta and a 20 delta as the short strike, both 20 wide, and they sold it right at the open. So that'd be like 9:30 Eastern time, my time. And then they also did a second data set where they sold it at 30 minutes later after the open, so like at 10 a.m. or 9 a.m. Central. And now and also for them, the stops were at 3x stops, but they were going to take profit once they got to like 25% profitability. That's always been their style with zero data expiration, which we like to hold for at least 50% probability. So you got to keep in mind these trades were on for relatively shorter duration. Their profit target was less. Okay, so with that being in mind, how did the different days of the week perform? I think we go to that next slide, O'Brien.
Okay, this one
So
right
yeah,
here, correct? Okay.
this is the 20 delta sold at the open. So as soon as things crank open here, okay. And so number one, you guys can see the win rates over there, both overall and days of the week. And in the average P&L column, which I think is the most interesting. And what they found was that Monday was the best day of the week to trade this, and Thursday, somewhat surprisingly, was pretty bad and like an outlier bad, with a not great P&L. Um, and then that bottom line is the conditional value at risk, the CVAR. And admittedly, I don't have a great handle on it, but I think it's basically like, your risk to rewards, in terms of, money you can make versus what you can lose kind of deal. And it's not all that different there. So I got to kind of look back on that and see and get a better understanding of that. And I don't know if Brian, if that's something
Well,
you.
it's your kind of conditional value at risk, and it's a 20-point wide spread. So that part is all going to kind of be very close to each other, right? Risk wise,
Hmm.
because of the,
Hmm.
the spread is all the same. And
Hmm.
so, but you can see that these days make a difference in your P&L, and it makes a difference in your win rate.
Hmm.
At least for that Monday and Thursday, that's a pretty big difference.
And then if we go to the next slide, that's just this, it's the same data, but just doing it at a half hour after the open.
Mhm.
Um, and I think things are, I can't say there's like super meaningfully different. If we click back and
Well,
forth in
yeah,
terms of.
it's pretty much it's pretty significant. It's stayed in line that
Hmm.
you're going to lose, you know, like double what you're going to make the on Mondays based on Thursdays, based on their data, you guys. This is
Hmm.
this is for information purposes and so forth, and it's not as Dr. Meadows is saying, it's not how we actually trade this, but it's still providing some interesting information, because I know in the past, Dr. Meadows, you've mentioned that through some of the studies, if you have seen from yourself and others, that Monday is the easiest day for zero DT trading.
Yes, there have been other folks that have put out data, to basically say that too. And again, just to show you how different things can be skewed, um, the other data sets I remember looking at, it didn't, it showed Monday being like kind of like this modestly better thing, but like not, like nothing came out negative like a Thursday. I think honestly that might have to do with the time period looked at. I'd
Mhm.
wonder if the short deltas being a lot lower, like more like 10 deltas or lower, like how we typically trade, that can make a huge difference.
Mhm.
So, and when they go to their conclusion, they were saying like, there must have been some really outside, and I think the next slide is some of their takeaways.
Before we continue with the video, I just want to quickly point out that if you're interested in learning more about the zero DT strategy or any other of the strategies that we teach here at Dorian Trader, you can check out our Dorian Way School. We're going to put the link in the description area. It will help you accelerate your learning process. Thanks for listening. Now back to the video.
There had to have been some really big losses on Thursdays to make that overall number be negative. Because I was
Mhm.
trying to think, is there something peculiar about Thursdays in terms of, macroeconomic announcements or CP, something, you know what I mean? But
Sometimes the
I
CPI
couldn't,
comes out on a Thursday, so
but
maybe
yeah.
maybe that could have been what skewed it. Or they would have to kind of um, comb the data a little bit more and kind of figure out why
Hmm.
was that the case and why only
Now,
Thursdays.
now, as far as like a takeaway or anything like that from this, you
Mhm.
know, for somebody like myself, and I think somebody that takes the course and really absorbs everything and they're comfortable making adjustments and all that kind of stuff, I don't think it matters a whole lot. But if I were somebody that was not an everyday zero DTE trader or wasn't somebody who was so keen on making adjustments and that kind of thing,
Mhm.
I actually might incorporate some of this data to say, hey, maybe Monday's the best day for this if I'm not going to do a whole lot of adjusting and I won't have a win rate, and maybe Thursday's a day I'm going to lay off if I'm not going to do this stuff. You know what I mean? So I don't, I was trying to think like what's an actionable thing for somebody in the group. And I guess it would depend on your trading style with zero DTE. I know some people are not everydayers with it. So if you're not going to do every day, maybe particularly do Mondays and not Thursdays, So, yeah.
Yeah, so I haven't run the numbers myself, but I do believe Tasty Trade is saying that you will be profitable if you had a three times loss, right? If you
Hmm.
got out
Hmm.
when you're down three
Yeah.
times, and that if you go with a 25% profit kind of exit point. So that could be one of the things that you take away from this type of study is that if you don't want to adjust, then you could get out when you're up 25% or exit when you're down three times. Your win rate is going to be pretty high, probably 90, maybe even a little higher than that is when you're having that 20, when you're getting out at 25%. And maybe it can work out and be profitable if you have the discipline to make sure you are getting out at three times the stop. Otherwise, you still have no business doing the zero DT trade if you can't have that discipline because it could come back and really bite you hard. And so that's what I get from it, Dr. Meadows, is that it's maybe you stay away from Thursdays and you take off you do 25%, and if I wouldn't do the 20 delta, I would probably do no higher than a 10 delta, but as you know, we're usually initiating the iron condor at lower deltas than the 10 on both sides. Most of the time it's probably tops an 8 delta, or less. So that gives us a little bit more of a probabilistic edge, but obviously you're taking a little less premium when you're doing that. You're going to get a lot more premium at the 20 delta, and obviously you'll get a lot of premium if you went to the 40 delta. But you can expect to be tested a lot more often at those type of delta levels. Right now, I would like to do a zero DT trade, but I should have put it on when we're down 25 or something like that. But we're going to go and check and see what it looks like right now. So if we go here, expected move, this is something Professor Sam talks about. As you guys know, this is something that we do often. We want to look at the expected move, and we kind of get the universal one based on doing the straddle price. But the platforms that we recommend are going to put the expected move over here on the right-hand corner here. So Tasty Trade, I believe, have a really good formula. But when I'm initiating a trade to be uniformed, I go with the straddle price. And so in this case, let's say the straddle price is 34. If we round that up, that's a 68. So if I went and I decided that I was going to put my call about 68 points higher. So we take the 58.99 plus 68. That's going to take us to 59.67. So 59.67 is about a 6 delta. So if we go there and let's say we did a 20 point Y to start our zero DT trade, that's giving us about 67 $65, $60 to $65. Let's say we want to go a little further on the put side. So let's go 100 points down. So 57.99. Okay, so let's go to 57.99. Obviously, we're not gonna have a 57.99. We can go to the 5800 here. That's way too much. That is a 3 delta. So we're most likely not gonna fall like that. So the expected move I said 2 times was 68. So if we take the 58.99 minus the 68, that's going to take us down to 58.31. So about 58.30. That is an 8 delta. So I'm probably not going to go that high. But if we did that, that's 145 for the trade. So if I decided, okay, well, I'm a little bit more nervous about the put side. So let's go to something like this. That's a 20-point wide there. And if we went to 2 contracts, that would give us about 210. It would have to fall a decent amount. We're going to try to get out of the trade with the $100 profit. So that's going to be the trade here. We're going to put it in at 210. We're going to give it a quick second. I'm going to put this in at the 0DT account here, put it back to 10, and we're going to send that, and we're going to count to 5, and then we're going to see if we can get filled. So 1 1,000, 2 1,000, 3 1,000, 4 1,000, 5 1,000. We haven't got filled. So in this case, I like that put side at the 5. If I was going to do something to still get that 110, I would probably make the call side maybe 25 points wide, something like that. I'm more concerned, even though the market is showing its resilience, it's showing its strength to the upside. I'm more concerned about the put side, at least today. All right, so we didn't get filled, so we can hit replace, and I'm going to make the call side 25 points wide so we can get the 110 price. So how I have to do that on TastyTrade, I have to cancel the order, and then I have to go into canceled orders and then do a similar order on that one I had. And then I change the call side there. So if I do it like that, now I'm getting at 115. I'm going to put this down to 110 so I can get filled right away. And I thought I was going to get filled right away, but they're not giving it to me for some particular reason. I'm going to count to 5 once again. Getting filled is not easy, but 1 1,000, 2 1,000, 3 1,000, 4 1,000, 5 1,000, and so didn't get filled, and I want to let it hold for a second because it feels like we should get filled at that 110 level. So there we go. And the reason why I held it longer than that 5 seconds, you guys, the mid price down here was telling me otherwise. I mean, it was telling me that we could potentially get that 110. And so as you can see, the market just jumped up. And so now instead of getting 110, I could have got obviously a little better than that. But I don't think we're going to go up a ton today, but that could be, I could be off.